Now, on Thursday, we have the Fed's preferred measure of inflation being released. It's the core PCE print. You can see here. Now, the PCE print refers to the measurement of personal consumption expenditures, which tracks the expenditures on goods and services by US citizens. And since around 2012, the PCE index has become the primary inflation index used by the Federal Reserve to guide its policy decisions. It's very important. Now, if we see an out of consensus print, it will be very likely that we'll have a strong move in gold. You can see that market's consensus is here, with the minimum and the maximum consensus is there. So if it comes in either below the lows or above the highs, we could expect a significant move higher or lower in gold. So if it comes in much higher than markets are expecting, look for a drop lower in gold, and vice versa if we saw a lower than expected print. Now, if we just look at the sort of more widely followed CPI print, we can use this using the event tracker on Seasonax to give us a sort of a guide as to what kind of moves we could potentially expect. And you can see with the CPI print over the last 5 years that, that when we've had sort of surprise prints, you can see they've often been falling 2% or falling above 1.5% or gaining above 1.5% or maybe above 2%. So if we do see an out of consensus print, this does tell us that, if we see a move higher or lower in gold by about 2% on the day, that's probably the largest extent you probably get, and something around 1.5% would be reasonable in terms of expectations for any move. It can be very helpful for intraday trading and trying to see what the extents of an out of consensus move would be on gold pricing. Major trade risks. All outlooks have risks, this is no exception. The major trade risk here is that the strong seasonals don't necessarily repeat themselves again this year, and then key technical resistance or support can impact the extent of any instrument moves. Remember, don't just trade it, Seasonax it.